Welcome to my channel Eco Tutor. Good morning students. Today's topic is credit creation by commercial banks. Slides are prepared by Dr. Satya Prakash. Commercial banks are those banks which accept deposits from the public and offer loans for the purpose of consumption or investment. Commercial banks, their main function is to accepting deposits and advancing loans. In accepting deposits, commercial banks offer interest which is known as borrowing rate. It refers to the rate of interest offered by commercial banks to their deposit holders, and those who deposit their savings or income in the bank, and in lieu of that the rate of interest is offered by commercial banks. This is known as borrowing rate. Lending rate, it refers to the rate of interest at which commercial banks lend out their reserves to the investors, and investors who invest their money to generate the income. Investors borrow money from the commercial banks. In lieu of that borrowings, commercial banks take the rate of interest which is known as lending rate. Spread is the difference between lending rate and borrowing rate. We can understand this with the help of example such as, if the lending rate is 10% and borrowing rate is 5%, so the spread is 5%, which is the profit of the commercial banks. Demand deposits, these deposits payable by the banks on demand from the account of account holders. For example, current and saving account deposits. Two types of deposit are there: current deposits and saving deposits. These deposits are known as current account deposits and saving account deposits. The difference of these two is the rate of interest. That is, saving account deposits earn more rate of interest than current account deposits. Time deposits, these deposits which have a fixed period of maturity, for example fixed deposits, these deposits also known as term deposits, and these deposits are different from demand deposits. Basic functions of the commercial banks. There are two basic primary functions. One, accepting deposits, and another one is advancing loans. Accepting deposits. Commercial banks accept deposits from the public. People can deposit their cash as checkable deposits or non checkable deposits. The difference between these two is checkable deposit is that against which checks can be issued and money can be withdrawn anytime. And non-checkable is that against which checks cannot be issued and money cannot be withdrawn anytime. Advancing loans. This is the main function of the commercial banks. Advancing loans. Advancing loans to the producers for investment expenditure and to the consumers for consumption expenditure. So commercial banks advances the loans to the producers to meet their investment expenditure and to the consumers to meet their consumption expenditure. Often the loans are offered against some collateral. Collateral means security offered by the borrowers of the loan. Money creation by commercial banking system. We explain how commercial banks create money many times more than their cash reserves. We explain how cash reserves of the commercial bank serve as the basis of money creation. Process of money creation. Commercial banks create money in the form of credit to the borrowers. Therefore, money creation by the commercial bank is also called credit creation by commercial banks. So, money creation and credit creation both are the same term used by the commercial banks. Commercial banks create money or credit on the basis of their cash reserves. And here cash reserves is the reserves which the commercial banks have to keep of their transactions in cash with Reserve Bank of India. Let's say that a bank receives a sum of rupees 1000 as demand deposits, and also let's assume the cash reserve ratio CRR in short term is 20%. Therefore, the bank retains rupees 200 and lends the remaining rupees 800 to a borrower, while the depositor claims that he has rupees 1000 with bank, the borrower has rupees 800 too. Therefore, a single bank manages to credit of rupees 800. If we extend this example to the entire banking system, then it offers an interesting insight. Let us say that borrower takes loan of rupees 800 from bank A and deposits it with another bank B. Bank B retains 20%, that is rupees 160 equal to 800 into 20%, and lends the remaining rupees 640 with the bank C. The process continues until the time that the deposit sum is nearly equal to the cash reserve ratio. Just a single deposit of rupees 1000 with CRR of 20% leads credit creation of rupees 5000. This example we can understand with the help of table. Initial deposit, say it is 1000 rupees. Cash reserve ratio, and which is also known as legal reserve ratio, it is 20%. So out of this 1000 rupees, 800 rupees is extended as loan and rupees 200 is kept as a cash reserve ratio. In round 1, this 800 rupees is deposited in the bank, and out of that 800 rupees, 20% is kept as cash reserve ratio, that is rupees 160, and rupees 640 is extended as loan. In round 2nd, 640 rupees is deposited in the bank and loan extended rupees 512 as rupees 128 is kept as a reserves, that is equal to 20% of rupees 640. These rounds go go on and these deposits received amount to equal 5,000 rupees and loan extended equal to the 4,000 rupees and cash reserve is amount rupees 1,000. In the above schedule, it should be noted that the total amount of deposit received, that is 5,000, is ascertained by the formula of money multiplier. The money multiplier is defined as the inverse of legal reserve ratio, LLR, LRR, legal reserve ratio. Algebraically, money multiplier MM is equal to 1 upon LRR, legal reserve ratio. Money multiplier is equal to 1 upon 0.20. It is 20% and which is equal to 5 times. As money multiplier is 5 times, so this implies that the total deposit rupees 5,000 increased by 5 times the initial deposit 1,000 through the process of credit creation. This way, the commercial banks creates the credit. So to know how the commercial banks create credit, we must understand these terms such as borrowing rate, lending rate, spread, money multiplier, and in nutshell we can say that if we know the value of initial deposit, say initial deposit is 1,000 rupees, legal reserve ratio, that is 20%, we can estimate how much commercial banks create credit, that is with the help of 1,000 rupees initial deposits, 20% of legal reserve ratio, the credit creation by the commercial banks is amounting rupees 5,000. That is, it increased 5 times of initial deposits. So I hope you understand this topic. Thank you.